Our next guest sees another constructive setup for risk in 2025. Mark Okada, the co-founder and CEO of Sycamore Tree Capital Partners here at Post 9. It's good to see you again. You were walking up, and I said, hey, what's up? And you said, everything.
That's right.
It literally.
Yes, that's true.
Does it keep going?
Well, I mean, the setup's great, right? I mean, Trump is inheriting an economy, both a market economy, so the Wall Street economy looks good, obviously. I mean, we're talking everything's up. The Main Street economy looks good. It's coming, it's softening, but from a very high place. And I think with all the animal spirits we've been seeing in the last, post the election, we may not even land. There's no landing, right? That's
kind of been in that scenario for a while now, thinking, right? Forget the soft landing. This looks to be a no landing economy. When you have the Fed chair yesterday himself using the word remarkable.
And that's been our call.
The economy,
Scott. That was our call, right? I said that earlier. I don't think the Fed's going to cut. Things look too strong to me. I mean, and they cut a little bit, but I mean, maybe they pause. But inflation's in a good place. Liquidity is amazing. Everyone said when they start cutting rates, we're going to see all this money flow out of money markets. It's up. So yeah, everything's up. That's all good. The setup's up, good. So the credit guy's still bullish.
Yeah.
And now, Mr. President, just don't screw it up.
What do you mean by that? Like, how could it get screwed up?
Well, the valuations are high everywhere, right? So who really wants to own it at this price, right? I think that's the reason why you have so much dry powder out there. We like dry powder. I think that's one of our themes. Take a page out of Buffett's book. It's not a bad page. He's much larger than we are, but if you can sit in CLO AAA and earn 5, 5.5, 6, 7, 8, whatever it is. I mean, this year for us is going to be closer to 8, but that's going to be much better than T-bills. But that's safe, inflation protected, volatility protected. Rate vol takes off when you get a sweep. In the 4 instances in the last 15 years.
You mean a sweep on the Hill?
Yeah, you get a lot more rate vol coming out of that because of the things that potentially could go wrong. And all the scenarios are on the table, Scott. Stagflation, depression, a recession, a giant peace dividend, and another growth and another round of inflation. Or hopefully we just stay in this Goldilocks thing, which would be wonderful for me.
I mean, you say these are the words you gave to our production team. An untethered Trump means all scenarios are possible. Geopolitics, bond vigilantes, rate volatility, deportation, recession, trade war, reflation, meme implosion.
Yeah,
that's a long list.
And they're real. They're all possibilities. They're all possibilities at a time when things are very priced nicely. But do you listen to all that now when nothing has happened and the fundamentals look so good? I don't think so. I think we stay long our credit plays. We stay long our risks that we like. We keep some dry powder. But
what are you going to do with the dry powder? Like if you have a growing amount of dry powder, right? You mentioned Buffett and those folks at Berkshire. They're on like a Mount Everest of dry powder. And some are wondering, why do they keep sitting on it? And what are they going to do with it? Maybe valuations are prohibitive to them doing anything with it. So what are you going to do with yours?
Well, for us, right, it's really saying, what is fixed income supposed to do? What is your fixed income allocation supposed to be in a balanced portfolio? It's supposed to be the money you can count on to rotate into risk assets when that happens. Now, it's kind of weird saying that now when we're so bullish, right? But the things that keep us up at night say that at some point, maybe some of this happens. The 15% case is what's priced in now for inflation.